Hey guys, welcome to Midweek with Indiacharts. I'm Muskan Kapoor and I'm joined here with Jay Bora. Today, Jay is not feeling very well, but we are here to shoot because there's an important update and we did not want to miss Midweek for this week. Anyway, Jay, I hope you feel better soon. But yeah, I will just jump to the question. Is there a change in the outlook of Nifty? If yes, what are the factors affecting this change and what is currently happening?
Yeah, so I think this week recording was very important because all this while we have been, sounding bearish and, we were thinking that there would be a correction that would play out. So for now, we have seen that 1,200 point correction in the Nifty index. But, there are few things that are changing right now, and that has changed to our near term outlook. So I mean, we are not that much bearish as of now. Okay, in fact, we feel that in the next few days or weeks there could be some bit of positivity for the Nifty index, and the Nifty index can actually head higher. So I'll quickly share my screen and share the factors that are leading to that. So the first thing I think we had highlighted earlier as well, that the 20-week moving average, that is where the Nifty is hovering right now. Okay, and this is getting defended at this point of time. Okay, so from the medium term perspective as well, the 20-week moving average, which is currently around this 17,880 mark, which is where Nifty is currently trading at. So that level and the 40-week exponential, which is at 17,517. So these are the two key averages to watch out for from the medium term perspective. Okay, so as long as we are above that, we are okay for now. Okay, the moment this key averages are broken, so that is where you can start anticipating of a deeper correction in the days to come. So around this point, let me highlight. So around this point was where we were turning a little cautious. That was because we had already highlighted that there is negative divergence that is getting developed. Then even the internal wave counts, if we see, everything was overlapping, the breadth was narrow. I mean, all this stuff was happening around the high point, so that was making us a little cautious. But now with this correction, even the momentum indicator has cooled off and it is now approaching towards that zero mark. So in case if we break the average, then I think the correction in the short term could be up to the 40-week. So that too, when we look at the lower time frame. So the way how we are counting is, and why we are a little confused is because around this point, around this point, we had posted a positive weekly close on the Nifty index, okay, which makes this low as a crucial support. But when we go to the lower time frame, this looks like a three-wave decline, which is W, X, Y. This pullback is an X, and now again this correction, either Z is complete over here or there might be one more decline, after which the Z could be complete. And generally in Elliott wave terms, whenever this W, X, Y, X, Z, this sequence of correction is complete, that is where we end up getting a meaningful retracement in the short term. Okay, so either our guess is that either the Z is complete or it is near to the completion. So that is why this itself is telling us that maybe one entire decline might be getting over, and in the days to come, what we can see is a retracement of this entire decline. Okay, so this is one factor which we feel is supportive of the fact that Nifty can bounce back in the coming trading session. And also, you would have often heard from people, and in general, there's a perception of a pre-budget rally in the Nifty index. So typically, if you would have seen the tops and the bottoms, I mean, especially the tops in the Nifty index, it generally happens, somewhere in the month of January or the early Feb, when the budget, euphoria is complete, and that is where the market tends to cool off. So seasonality is also one of the factor. Then the other thing which is very important to highlight is basically USD INR. Wait, I'll open this chart on investing. So if you see, USD INR, it was actually taking support at the 20-week moving average, and it was continuously strengthening and gaining. Okay. You can see this over here that the USD INR was actually rising after taking support at the 20-week moving average. But now what has happened is that it has overlapped the previous high. Okay. So that means that this is probably not an impulse move. So what it means is that there are two possibilities. Either, USD INR sees a correction up till this point, or what might happen is that USD INR can form a triangular sort of pattern wherein it does time pass. It goes down till this point, then it bounces back, then it again comes down, and by that time, the averages will come up, and then eventually it will move higher. Because the larger wave count in USD INR is that this was 1, this was 2, this entire thing was 3, and now the fourth wave is going on. Okay, and typically in fourth wave triangles can form. So that is why, so see, this is one more factor which is leading to a positive outlook, because if there won't be a pressure on the INR front, okay, then that could be a tailwind for the equity markets in the short term. Okay. Now the next and the most important now the next one is that if you see Nifty small and mid caps, they are very resilient at this point of time. So let me, yeah. So if you see the Nifty index, while, I mean, if you see the small cap index, so while Nifty has corrected and it has almost come back to this low, the small cap index has barely corrected. Okay, which says that there is strength in the market, at least in the small cap part of the market. Okay, and this particular thing is true for the Nifty mid cap index as well. Okay, so if you see the chart of Nifty mid cap index, you can see almost similar setup is there. In fact, this was trading in a channel. It actually took support around the lower end of the channel, and now it is bouncing back. And moreover, this no way looks like a start of a bigger decline. That is because this is consolidating over here. Even if a decline has to come, then at least there will be a next leg of up move, because this appears to be a clean move. Okay. So what might happen that if this is a correction also, then this might only be A, then we might see B, and then a C wave can come. So again, that would lead to some positive momentum in the near term. Okay. So USD INR, then sorry. So if you see USD INR and then again this small mid cap index, so these are two factors. Now, one thing which was very important and that was highlighted by Rohit sir in his Saturday report. So that is the put call ratio. Okay. So if you take the put call ratio and smooth it with the 13 EMA, which is the 13-day exponential average. So this is the outcome which you get, which is the blue line. So you can see that whenever there have been peak for this ratio, okay, this has resulted into bottom in the equity market. Okay. So what has happened is that eventually the index has rallied for a while, and later on, there can be a possibility that it may cool off. Okay. But this is one more thing that is very important, and this actually tells you the sentiment in the market, because whenever this is high, that means that people are buying put. Okay. And when do people buy put? When there is extreme pessimism. Okay. So because of this extreme pessimism, and market usually tend to work the other way, because see, over here S&P has made a higher low. Okay. But this has made a higher high. Okay. And there is a divergence between what is happening in the derivative market and what the price action is really telling us. So actually the panic is a lot more at this point than at this point. Okay, so this is one more, contra indicator which is telling us that there could be a pullback in the short term. And also, if you see the charts of Dow Jones, so I had actually highlighted this in the last week recording as well. So earlier, the anticipation was, see, while we were talking last time, Dow Jones was somewhere around this point. Okay, so the anticipation was that the averages will not break, and eventually Dow Jones, after this minor consolidation, will start its next leg of down move. Okay, but rather what happened last week was that the consolidation broke on the upside and the averages was taken out on the upside. Now if you zoom out the chart, okay, and you see, so because I was anticipating, because we were anticipating the next leg of decline, we thought that ultimately this trend line breakout would fail. Okay. But rather what has happened is that this trend line support is actually still valid right now. And if the high gets broken, okay, which is right now at 34,712. So, you can get a short-term trend reversal as well. In fact, if we tell it in Elliott wave terms, then this was A. Okay. Then A is equal to C level can come in the medium term. That is basically till here. I mean, I don't know how far it will go, but essentially it would mean that this was one leg, this correction is there, and now one more up move can come. Okay. Now, what this can lead is that what this can lead to is that if you see the S&P 500 index, so it was actually trading in this falling channel, and the S&P index is very much following this channel. So if the breakout in the Dow Jones is true, then ultimately even S&P will break out from this falling channel. Okay, and even S&P might end up seeing a deeper pullback in the days to come. Okay, so this is one more thing, that is making us change our outlook as of now. And why do we feel that, many would say that we are preempting that this high will be taken, but as of now it is not taken. So what is making you preempt that? So if you see many of the other global indices, I mean, especially the developed market, so you see DAX has broken this high. Okay, you see CAC index, which is the France index, that has broken this high. If you see the FTSE index, so FTSE index, if you see, it has actually broken out from this high. Okay, it has broken out, in fact, from the entire consolidation. So it has not only broken this high, which was very crucial, it has also broken out from its previous high. So FTSE index is behaving a little differently. Okay, but that is telling you that there are strength in this market. Now if you see other Asian markets, so if you see Taiwan index, sorry, this is not the one. Wait, so if you see Taiwan index, it is actually forming some kind of inverse HNS pattern. Okay, which are typically signs of a reversal pattern. So what we are saying is that even if this is not a bigger reversal pattern and this is just A, so this decline might be B and a wave C up move can come. Okay, which again will lead to a bullish momentum in these indices in the near term. Okay, if you see Thailand index, okay, which is also known as SET index, so even that has broken out from this consolidation and it is making higher highs. So over here as well, the momentum looks positive in the near term. And I think there are other markets as well, like Bovespa, which is the Brazilian market. So Bovespa had actually seen a 5-wave rise from the lowest point. Okay, you can see over here that there was a clean 5-wave rise in this. So this probably might be just wave A, wave B, and wave C is going on. But again, there could be some positive momentum in the near term. So essentially what we are trying to say is that the global outlook, okay, which was earlier looking bad, that seems to be turning around in the past few days. But what has happened is that the Nifty index has become relatively weak and it is falling. So earlier people were telling that the decoupled has happened and the Nifty is only going to move higher. Now the inverse is true. I mean, people are now telling that India is decoupled. अभी वो नीचे में गिरता ही जाएगा. So, like we have mentioned earlier as well, there is nothing called as decoupling. I mean, the trends will be the same. It is just that there will be underperformance and outperformance. So, supposingly, अगर global market ऊपर जा रहा है, okay, and they have gone up say 5%, 7%, तो Indian market might only go up 1% or 2%. It might be flat, but it may not happen कि उन लोग ऊपर जा रहे हैं और हम नीचे ही जाते जा रहे हैं, नीचे ही जाते जा रहे हैं. I mean, if at all sometimes that happens, okay, then ultimately there is a mean reversion. Because see, if you see Hang Seng index, okay, Hang Seng index was the most terrible performer last year, okay, because if you see the chart, it has been falling relentlessly, okay. When the entire market was going up, the Hang Seng index kept falling. But in the last 1 or 2 months, it has bounced back very sharply. So mean reversion usually happens. Okay. So that is what is something that is happening with the Indian markets, because Indian markets had outperformed. So, it is not participating that much on the upside. Okay. And it is more or less, underperforming. So that can be the phenomena in the short term. But like you see the mid cap index, which has been very resilient, and it is just consolidating while the Nifty index has gave up major gains. So that can happen, and you can see a very stock specific move in the short term. Okay, but specifically for Nifty index, I'll tell you what structure we are anticipating. So see, in Nifty index, two things can happen. Okay, either we get the retracement of this fall, okay, which would be, I mean, somewhere around 50 or 61.8% is something that we can expect in the Nifty index. So if I draw the Fibonacci retracement levels, so it comes to around, assuming that this is the lowest point, okay. So if I do the 50% retracement, then it comes to around 18,330, and the 61.8 comes to around 18,460. Okay. Now, if 18,460 is taken out on the upside, then that is the time, where you can actually anticipate that we might get, something of an ending diagonal sort, wherein this is A, this was B, this was C, this was D, and now E wave will come on the upside. Okay. This we are not so sure in the Nifty index whether it will happen or no. I mean, ideally it should happen. Okay, but 61.8%, which was around this 18,460 mark, that is very crucial to watch out for in the short term. If that gets broken on the upside, then you can see that possibility of Nifty moving higher towards those levels. But if you see Bank Nifty index, that has been very resilient as compared to the Nifty index. So lately, we have seen some underperformance from the Bank Nifty index. But if you see the weekly chart, it is still comfortably trading above the 20-week average. Okay. So in Bank Nifty, if you see, there is a good case of Bank Nifty once again revisiting its previous high and forming an ending diagonal, which is A, B, C, D. And at some point of time, when this correction is complete, you can expect it to move higher and it forms E. Okay. So that is the, near-term outlook. And there has been a change because of all the factors which I described. I'll just mention it once again. It is basically the resilience of the Nifty index. Then the put call ratio in S&P, what is happening. Then the Dow Jones crossing above the 20-day average and breaking out from the consolidation. The bullish momentum in the global indices. Okay, and more importantly, USD INR, which is now showing sign of weakness. So these are the positive factors, which we feel that can be a tailwind for the equity markets in the near term, and especially for the Nifty index. Now I'll tell you which are the things that are not in our favor at this point of time. Okay, so one is this RMI indicator. on the daily time frame and on the weekly time frame, they both are in sell. Okay, and you can see that the Nifty is not able to break above the key daily averages. So these are the risks that we see at this point of time, which is basically against us. But I think when the prices eventually reverse, which we feel might happen, then you might even see both of these factors turning as well. Because ultimately, if the prices move higher and it eventually breaks the average which we anticipate, then even this will change. Okay, and this might eventually give a bullish crossover. So this is what our expectation is in the near term. And if there is any change in the outlook, then like today we communicated, we be rest assured that we will communicate in the future as well.
True, I agree. It was a very important session to have because changing in outlook or like possible changes that we can see in the future are things we have to make people alert about. So thank you so much for doing this.
Yeah, and one more thing, it was very important to clarify because people generally think agar India charts hai to mandi mandi, or they'll keep telling bearish bearish bearish.
The
So it
bear
is
down.
not. Yeah, so it is not like that. We are slaves of data. So as we see the data changing, we even change our view. Okay, so just to highlight once again,
Hmm.
there, I mean, in the medium term, the risk factors which are there, those have not changed. Okay, but at least the risk factor that we were seeing it in the short term, those seems to have changed. Okay, that is why there is a change in the outlook in the short term. However, in the medium term, we still feel that things are not so great, and the risk factors which are there, those still prevail at this point of time. So maybe, if you have to summarize, then there can be some short term gain,
Hmm.
but the long term pain or the medium term pain which is still there has not gone out of the system yet.
I agree. Thank you so much for clarifying all of this for us. And yeah, we'll see you all next week. Thank you, Jay.